Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst, joins us now. Brian, explain. They lower guidance, but stock is up.
Yeah, I think the big surprise here, Alex, was that the RevPAR guidance reduction was actually more modest than some of the other hotel companies like Hilton and Hyatt. So I think that was a bit of a sigh of relief. They did acknowledge there's some U.S. softness for certain customer segments, but at the same time, they're seeing kind of pretty consistent international demand. So I think it was just the relative magnitude of the reduction that probably was viewed as being somewhat favorable.
So across Marriott and Hilton and Hyatt and all those other companies that you cover, Brian, are they seeing it to the extent they're seeing any softening? Is it from the leisure travel, the business traveler, both?
Yeah, good question. It's really from, I'd say, three primary customer categories: independent leisure travelers, extended stay, kind of the lower tier limited service customers, and then government employees, which are a customer base of some importance for Marriott. And offsetting that is somewhat greater strength in things like group bookings. So there's a bit of divergence across segments.
What about geographically? What's holding up? Because one can make an argument if you're tight on budgets, you're not going to go to Europe, but maybe you'll travel within the United States.
Yeah, so to the extent that Marriott did trim guidance, all of their guidance cut was related to U.S. and particularly those segments I mentioned. Internationally, they have not changed expectations at all. There's been some concern about inbound travel from international markets to the U.S., but within those non-U.S. markets, Asia, Europe, et cetera, they have not changed or in any way trimmed their expectations.
Put on hold, or are they still moving ahead?
I'm sorry, Paul, I missed part of that question.
Just in terms of expansion plans, are the hotel companies still planning on maybe developing new hotels or building new hotels, or are they kind of put their growth plans on hold?
Yeah, so the unit growth expectations in terms of new rooms are unchanged. They're still as they were. They have not really observed, and I'm speaking particularly about Marriott, which reported about an hour ago, they haven't really observed any changes in terms of construction starts. So there's really not been a material change. Obviously, in an uncertain economic environment, it's something that we're watchful of, but to the extent that we're looking at that, there's been no change in terms of their room expansion pipeline or development plan.
Well, what competitors do you feel like are okay? Let me ask a different way. If we wind up getting more calm and more indecision is thrown by the wayside, right, and we get clarity, which hotel lodging is best set up for that?
Right. So that's a good question. I think to the extent that we're talking about the big wild card being independent leisure travel, it extends fairly broadly across the companies. To the extent that we look at the degree of, let's say, cuts, Wyndham probably cut the most, and they're deeply in the extended stay segment. Maybe you would see a little bit more bounce back there to the degree that they have reduced expectations more. But I think across the board, they all have some degree of exposure to the segments that have been a little weaker, which is independent leisure travel, certain types of extended stay customer segments, particularly for Wyndham, and things like government employees, which I mentioned for Marriott.
We've seen a lot of soft data suggesting that inbound international travel is down. And this is just short-term data, maybe not any long-term trends. What are your companies saying about that?
Yeah, that's been a concern of ours for a while, that you would see a reduction, particularly from inbound travel from Canada and Europe. And I think to some extent, we've seen that. Marriott did say that their Canadian bookings for U.S. stay room nights were down about 5% year over year. However, they did observe that that was offset by stronger inbound travel from other markets. And also, I know yesterday, or a few days ago rather, Hilton mentioned that Canada represented only about 1.5% of their total company revenues in terms of Canadian customer stays at U.S. hotels, right? So the exposure to some of those inbound markets is relatively small, but there does seem to be some puts and takes where they're getting some relief from other markets, even though across the board, Canada inbound tourism to the U.S. is down. It's just not a particularly material percentage of the overall customer base.
So that's sort of the lodging side. What about the gaming side? What have we noticed in terms of an earnings or forecast or just any sort of read through there?
Not really much of a change in terms of markets like Las Vegas, which is really principally a domestic audience. Really not any material change in terms of expectations there, although those companies' guidance metrics are a little bit less specific in the case of the Las Vegas companies. We were watchful of the sector because at least one company, Churchill Downs, delayed a capital spending plan at the Churchill Downs racetrack, which just had the Kentucky Derby last weekend. And they were planning on a fairly large expansion project there, which they've delayed amid economic and trade uncertainty. But that does not seem to have extended to other companies. So no major changes in terms of capital spending plans or bookings trends for some of the major gaming operators.
So by and large here, what are the stocks telling you, Brian, here across the lodging space? Have they been selling off or underperforming the market? What are they telling us?
There were some of that. I mean, it's interesting to see, Marriott maybe up a little bit today. I think there's been certainly some expectation of an economic impact from both the trade and economic uncertainties. And we did see, for some of the recent sell-offs of the market, lodging companies were certainly hit. And so by the time we got to the companies like Hyatt and Hilton actually reducing guidance, the follow-on stock price behavior was not particularly pronounced because I think there's been some anticipation that we'll see a little bit of a slowdown amid the uncertain economic environment.
All right, Brian, thank you so much for joining us. Brian Egger, he covers all the lodging companies, the gaming companies, all the fun companies.